Good morning, it's Monday the 28th of February and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights. As always, we'll start with a quick summary of the key macro data points coming up this week in the world's markets. We'll then take a look in more detail at some of the bigger stories straight afterwards. So let's get straight to it. So let's take a look at the economic numbers being issued this week. And starting today, we'll hear an update on retail sales in Australia. Staying in Australia, Tuesday brings us their latest interest rate decision. We'll also hear from Germany about their retail sales, also the Eurozone and UK's manufacturing PMIs, the final figures, inflation in Germany, an update on GDP growth in Canada, and the ISM manufacturing over the US. On Wednesday, we'll be down under again with Australia's update on their GDP growth. We'll also hear how inflation's faring in the Eurozone with the release of their latest CPI figures. And that's something we'll be talking about straight after this. We'll also discuss the forthcoming Bank of Canada's interest rate decision, also due on Wednesday. And finally, the latest non-farm employment change over in the US. Thursday brings us the China Caixin Services PMIs, the PMIs for services in the Eurozone and UK, the latest meeting minutes from the European Central Bank, and the non-manufacturing ISM numbers in the US. And finally on Friday, the latest Eurozone retail sales figures and the US non-farm payroll release. And that's something that we'll also talk about in more detail after this. And the companies that we'll hear updates from this week are as follows. Monday brings us a pre-close trading update from Associated British Foods, and we'll be discussing this in more detail in a moment. Hays and over in the US, Zoom report their Q4 year-end figures. And again, we'll take a look at this in more detail as well shortly. On Tuesday, we'll hear from Flutter Entertainment, Page Group, Travis Perkins, and Manchester United. And on Wednesday, it's the turn of Aviva, Persimmon, Polymetal, Vistry, and in the US, Snowflake. On Thursday, both the television group ITV and the house builder Taylor Wimpey released their full-year results. We'll give our thoughts on both of these in detail later in the video. We'll also hear from Entain, the London Stock Exchange, Melrose and Rentokil. And finally on Friday, it's the turn of the property group Hammerson. So, as universally predicted, Russia invaded Ukraine last week, sending stocks sharply lower, whilst gold and oil surged, only for these plays to unwind at the end of the week. Russia-Ukraine headlines will of course continue to drive risk sentiment. OPEC Plus is also due to meet on Wednesday as oil spiked over $100 a barrel before easing lower. Will they increase output? Central banks will also be in focus, with the Reserve Bank of Australia looking to hike this year, and the Bank of Canada possibly doing so as well this meeting. So let's see what the week brings, but for now let's take a look at some of these stories in more detail. Primark owner Associated British Foods reported an upbeat set of full-year numbers back in January. The share price hit a 6-month high, but has since fallen around 5% so far this year. Total Primark sales were down 5% compared to pre-virus levels, and the grocery business saw revenues fall slightly from £1.22 billion down to £1.2 billion. However, the sugar business was up 7%. The outlook for Primark was encouraging. Management expected Q2 sales well above last year's and profits to remain steady. However, the end of virus-era restrictions and workers returning to offices could result in an upward surprise. Rising commodity prices in the foods business will be an area to watch, in addition to the company's ability to pass on the price rises. US online conferencing company Zoom released full-year results on Monday as well. Now, Q3 results released in November revealed that the communication platform was still growing, albeit at a much slower pace than before. And this is perhaps not so surprising given that most of the UK and the US have returned to the office, at least for a couple of days a week. Revenues jumped 35% year-on-year in Q3 to $1.05 billion, whilst earnings per share came in at $1.11. Now, Zoom lifted its guidance for Q4 with revenue forecast at $1.1 billion and full-year revenue at $4.08 billion, marking a 54% increase year-on-year. Earnings are expected to rise to $4.84 per share on an annual basis. Well, the stock trades at levels last seen in April 2020, and that's down over 75% from all-time highs reached in October 2020. Wednesday brings us an update on CPI in the Eurozone. Now, January's CPI rose to 5.1%, a 30-year high, raising pressure on the ECB to act to rein in the rising cost of living. Now, the ECB adopted a more hawkish stance in the latest ECB monetary policy meeting, or rather the press conference following the meeting. However, policymakers then appeared to backtrack. With energy prices surging higher as Russia invades Ukraine, inflation is likely to remain elevated. Producer prices are well above 20% across the region. Another high inflation print could put the ECB back on the more hawkish path, boosting the euro. Now, whilst so much focus has been on the Fed and the likely trade hike in March, there is a good chance that the Bank of Canada could steal their thunder and hike rates on Wednesday when they announce their latest decision, around 3 weeks ahead of a similar move by the Fed. Well, in a similar picture to the US or in the UK, Canada is experiencing 3-decade high inflation in addition to a recovering labour market. Inflation, the Bank of Canada said, could well remain elevated across this year. Now, the Canadian Central Bank has already concluded its bond buying programme, so a 25 basis point rate hike would of course be the logical next step to tighten monetary policy, particularly given that the Fed is as good as guaranteed to hike on March the 17th. So as a result, do obviously keep an eye on the Canadian dollar. On Thursday, British television group ITV report end-of-year results. Well, the ITV share price has traded relatively flat across 2021 as advertising started to pick up and life returned to normal. So whilst in H1, ITV's figures were underwhelming, the latest update Q3 was more encouraging, with total advertising up 30%, setting it up for the highest level ever recorded, although the full-year total is expected to come in slightly lower at 24% year-on-year. Meanwhile, the studios business is expected to book a 32% revenue increase, and that's up from 26% in the H1 results. ITV expects the studios business to recover to pre-virus levels this year, with margins expected to rise 13 to 15% over the next 4 years. Also on Thursday, we'll hear from the house builder group Taylor Wimpey and how they've fared over the last financial year. Well, full-year results arrive against a strong backdrop across the year. Historically, low interest rates, good mortgage availability and a booming housing market are likely to have helped Taylor Wimpey towards operating profits of £820 million, with margins of around 21 to 22%. Now, margins will be particularly in focus given the ongoing supply chain issues and rising input costs. So far, house price inflation has offset rising building costs, which, if it continues, should mean that margins remain supported. Forward sales will give some insight into how demand in 2022 is shaping up. The share price is trading at a yearly low and down 26% from the year-to-date high. And finally, on Friday, we'll hear the latest update on non-farm payroll figures over in the US. Well, January's non-farm payroll saw considerably more jobs than forecast added to the US economy. 467,000 jobs were added, after a rather disappointing January report when just 150,000 jobs were added. Both December and November's NFPs had both initially disappointed before receiving significant upward revisions to 510,000 and 647,000 respectively. After all those fears of the latest variant hitting the economy, the impact to the labour market was almost non-existent. As the labour market continues to recover and vacancies are elevated at well over 10 million, wages are elevated to, of course, attract talent. Wage growth in the 12 months to January rose to 5.7%, and that's up from 4.7%, boosting expectations that the Fed will, of course, act aggressively to tighten monetary policy this year in order to rein in inflation. The February NFP is expected to see 400,000 jobs added to the economy, and the unemployment rate is expected to fall to 3.9%. So, those were the big stories in detail. Let's wrap up with a look at the dividends due this week. In the FTSE 100, we'll hear from DECRA, Hargreaves Lansdown and Barclays. In the FTSE 250, we'll hear from Diversified Energy Company, Safestore, Ashmore, Personal Assets Trust, Hayes and Genus. So there you have the highlights coming up this week. As always, thanks for watching, and don't forget to click on that subscribe button to make sure you don't miss out on any of our regular videos. Also, as always, a reminder that if you haven't done so already, do try to download our app. Why not give it a try to make sure you receive all the latest up-to-date financial news and trading signals? So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.